Good morning, everyone. Thank you for attending, thanks for listening in, and thanks to Reed Corporate for putting on another spectacular conference. Calidus Resources is a gold miner in the Pilbara of Western Australia, and we're also looking at demerging some lithium assets that we had in ground surrounding us in a not too distant future. Just after the last conference, we poured our first gold, and I certainly thought we'd be in a lot different place to where we are today for this talk. It's been a pretty torrid time, it's fair to say. Let's rip the band-aid off and get through the bad stuff, and then let's talk about the positives moving forward. This time last year, 80-cent share price, about to pour first gold. We've now poured first gold, we're making money. Gold price is up 20% and we're down 75%. Not great stats to read out. As Grady said, a lot of people interested in gold because of that gold price and uncertainty. And all I'd do is ask you to consider, yes, Gold Road, fantastic company, great prospects, but if you want true leverage into a gold miner, I think Calidus should be on your radar for a further look. So what do we have? The Warrawoona Gold Project in the Pilbara, 1.7 million ounces of resource, currently sitting around 70,000 ounces of production per annum with a clear pathway to 130,000 ounces of gold production per annum. That's via bringing in some undergrounds beneath our pit, some high-grade satellite pits, and then the very high-grade blue spec satellite deposit, which 24 grams a tonne sits just down the road. Okay, let's get on to my therapy session here, if this will let me go. Right, what went wrong? It was a perfect storm in many ways, but I think what I'd like to point out is there's been a lot of learnings and we have fixed these now. So first issue, lack of water. There wasn't enough water in the mill. We had a piece of equipment in the mill not recovering enough. That kept our tonnages down, that kept our ounces down, and therefore we didn't produce as much gold as we would have liked. We've now got new bores in, we've hit water in the pit, thickener project, that piece of equipment has been upgraded, and we're now milling well above nameplate. Mining, we started with lower movements. That was a combination of COVID availability, skill shortages going on. Pleased to say that's improved remarkably. McMahon's are now invested in the company. They own around 10% of the company. That's our contractor. You know, so they live and die by their performance with us, so hold their feet to the fire. It's a good place to be with your contractor. Grade, we had issues at the start with grade. As we were doing blasting, that lack of supervision, lack of labour, we didn't get the grades we were looking for at the start. Our reconciliation has improved out of sight, and we're seeing consistent grade delivered to the mill. And the final piece of the puzzle was financial. We were very low on cash because of that lower startup. So we did rip that band-aid off recently, raised just over $30 million, which puts the company on a very stable footing moving forward. Unfortunately, that also sort of hammers you down at that time. People move, you know, the price moves back to the placing price. So instead of seeing an increasing price through this increasing gold price environment, we have been hit pretty hard. And again, that's where the opportunity lies. But it was the final piece of the puzzle that we just had to do to set us on the straight and narrow for what lies ahead. Just very briefly, there's a bit of a fly-through of what the pit's looking like now. We are actually starting to see a pit. We've taken down the mountains that were out there. We continue to expand along strike. But what we saw in the last quarter was record sales, just under 16,000 ounces, all-in sustaining cost just under $2,100 an ounce, and a margin of $400 an ounce over our costs. We also reduced our hedge, which is holding back our overall gold price a bit, quite significantly. Now, a couple of the things on this fly-through on the left, we just saw some pads on an adjacent set of hills. That's what we call St George. St George is a high-grade deposit right next to Klondike, so we're starting to target some of these other higher-grade satellite pits to bring in some extra grade into that mill, increase production and increase cash flow. Now, talking about cash flow, there's a there's a few numbers to get through here, so just bear with me. March quarter, we've talked about, we received on average $2,509 an ounce. Well, out of interest on the current pricing, we're looking at over $2,600 an ounce. Only $100 extra, but from a percentage margin, we're up almost 30% on margin with that slight increase. So we're seeing cash continue to accelerate as that gold price increases. And you can see what happens as we work through that hedge. It is there, it is limited though, and we will come out the other side, and that really does free up our cash flow. On our current cost to $900 an ounce, and on our future cost, which is the average of all of our open pits, our undergrounds and blue spec, we're seeing a really decent margin. And you know, if you're looking at our average of 100,000 ounces per annum, you can see what that means to cash flow. Bear in mind, market cap sitting around 100 million at the moment, and through all of those troubles. That's why I do think there is something to be said for Calidus to have a good look for your portfolio from a leverage point of view. Whichever way you skin it, this is another way of looking at it. Enterprise value per production ounce. Now, enterprise value includes debt, which we do have. We've still got $87 million of debt. We've paid off 23 million so far, but we need to bring that down further. But including that debt on our production per ounce, we are the cheapest gold producer out there on the ASX, especially when you consider our expansions that are coming along the line. And again, reiterating, we are cash flow positive. We are making good margins. So to me, it's just a matter of time as we deliver and gain confidence back again with the market. Has that just changed? Yeah, I have no idea what time is left, unfortunately. It's just changed totally the time by about 15 minutes, so we'll just keep cracking on. Stage one, just to tell you a little bit more about what we're doing with the gold mine. Stage one, conventional open pit. Why are costs going to come down? Well, our strip ratio reduces. As that pit deepens, you move less waste, there's less mining to be done, less cost per month, more cash to be made. So average all-in sustaining cost around the $1,800 for life of mine for that pit, and we remain on guidance for this half of 31 to 36,000 ounces at 2,000 to 250 an ounce. The underground is around an 800 to 900,000 tonne per annum underground, a couple of grams a tonne. Compared to the 0.85, 0.9 grams we're putting through the mill, 2 grams sounds very high grade to us, but what it does is it increases our ounce capacity. Same all-in sustaining cost, but more ounces means more cash flows. Now what we're seeing in the pit with the grade control, we're seeing a central core, some really nice grades in the central core, averaging at 4 to 5 grams. So it does give us confidence about that underground. We will do some more drilling in the coming few months on that underground. Briefly on blue spec. Blue spec, as I said, 24 grams a tonne, has to be one of the highest grade, if not highest grade, deposits in Australia. Comes out at around 10 grams a tonne by the time we dilute it. It requires a separate little float plant because it's gold antimony deposit. So we float that off and sell a concentrate adjacent to Warrawoona, so we tap into cheaper power and tails dam and keep costs down. Permitting's underway. We would hope to have had it by now. It's just taking a bit longer with the regulator these days. But we are engaged with front-end engineering on that sulphide plant, getting that ready for development in the coming year. What else do we have in the cupboard? So we've got a 6+ year mine life with what we're looking at already, but exploration-wise, with a dominant landholder in the region. We have been doing some drilling up near Marble Bar, the old Marble Bar goldfield, getting some nice high-grade numbers, but also immediately along strike to the west of Blue Spec, about 6 kilometres to the west of Blue Spec, we've got a discovery called Felix. We put our first holes into this 6 months ago. First hole was 41 metres at 2.4 grams, which is a fantastic result for the exploration team involved. We're also seeing some high grade cores, 6 metres at 40. So there's something very real down here. We need to do a bit more work with some trenching, some more soils, but we'll be back out again drilling there shortly. And again, this provides additional feed and higher grade feed to Warrawoona moving forward. In addition, Klondike itself, we've really just scratched the surface. This is our main deposit right next to the mill. Our underground only goes down, planned to go down 250 metres below surface. We've got a couple of holes down to around 500 metres below surface that hit grade. Now we understand the geology a little more from taking the top off the mountains. We'll be doing some other drilling targeting these higher grade shoots we're seeing in the pit and start to work our way down, proving up a lot longer life. But a lot of that drilling will also be done from underground in advance from the decline. I did want to touch briefly on lithium as well. We're in the middle of a demerger for our lithium assets. It's taken longer than expected. All our focus has been on Warrawoona and righting the ship. So we've got a pretty exciting land position up in the Pilbara and down near the Gascoyne in Western Australia. Just moving very briefly through these projects, this is the one that really excites me and we added to the portfolio of Pirra. So Pirra Lithium is a separate company. We own 40% of that company. And what Pirra has is a tenement on the Tabba Tabba Shear. The Tabba Tabba Shear is near Pilbara Minerals, Pilgangoora operation. It's a long strike on the Tabba Tabba Shear from FMG. FMG have a deposit there of around 8 to 10 million tonnes that they've defined. And we're 400 metres, our tenement boundary is 400 metres from a historic drill hole from De Grey, who drilled for lithium 3 or 4 years ago with 27 metres at 1.1%. So we know the Tabba Tabba Shear has good spodumene lithium mineralisation. We've got a tenement 400 metres along strike, covers 10 kilometres of that shear. We're seeing all the right geology there. And we've got teams heading out there shortly to start the soil and rock chip sampling. But we do see that as a very exciting target. Over in the East Pilbara, chase where the old tin and tantalum mines were, it's a recipe for success. So we've picked up most of the ground around Moolyella, which is where Global Lithium have their Archer deposit. And we've also picked up ground around the old Spear Hill tin tantalum workings. Just looking in at Spear Hill in a bit more detail. So we went out there, did some mapping, discovered over 4 kilometres of outcropping lithium pegmatites, quite wide at surface. And I suppose we stopped our exploration again with our focus returning to Warrawoona. So we haven't really followed that up. We did some limited drilling on a kilometre strike of that outcrop. And needless, it's obvious that the widths there were not what we were hoping for, but there is lithium. So we need to get back out, chase this further along strike, and see if we start to see it thicken up and get some stacked pegmatites going there. But there is lithium, we have drilled it, and that's a good start compared to a lot of our lithium explorers out there. So ladies and gentlemen, it's a very quick flick through. We'll be on the booth the next couple of days. Any existing shareholders, come talk to me. We can share our pain. New shareholders, if you have questions, I'd be delighted to answer. But we have built a mine in pretty tough conditions during COVID inflation. We have had a really tough start to life, but we've rectified that through a lot of hard work from a great team on site. We are now making money. As we increase that production, as the gold price has increased and as our hedge comes down, that just increases. We see great exploration potential in the area, not just near mine, but in our regional. Our balance sheet is there to support us in those endeavours now, not on the margin the whole time. We have that lithium demerger underway. We should get the first draft of the independent geologist report in the next couple of weeks. Prospectus DDC meetings are underway, so that's well and truly in line. And whichever way you look at us, I think from a valuation point of view, there is significant upside. So I would ask you to definitely do your own research, but I think there's a compelling opportunity there. And thank you very much.